Bonjour, ladies and gentlemen, and a very warm welcome to this special CNBC Africa broadcast coming to you from the intercontinental Mauritius resort Balaclava Fort. My name is Natascha Jacobsz, and I will be moderating today's discussion. Now, since gaining independence in 1968, the island nation of Mauritius has made strides from a low-income and agriculturally based economy towards a middle-income and more diversified one. As part of today's discussion, we'll be unpacking the Mauritian growth stories, as well as the business and investment opportunities that the country presents. Joining me on stage today to share their insight is our panel of esteemed guests. To my far right, Mr. Ken Poonoosamy, Chief Executive of the Mauritius Board of Investments. To his left, Mr. George Chung, Chairman of Kross Border. Our man in the middle, Mr. Raj Makood, Executive Director from the Joint Economic Council, and to my immediate right, Mr. James Benoit, CEO of AfrAsia Bank. Gentlemen, thank you for taking the time to come and speak to us. Ken, I'm going to start with you. As we mentioned, 1968, independence from the UK, a monocrop economy, heavily dependent on sugar, low growth base. It's 45 years later. Diversified economy, annual growth rate, at least for the last 10 years, of about 5%. What's been the key driver to this economic turnaround?
I think, first of all, the Mauritian economy has been able to adapt itself to the challenges. We have had the foresight and leadership to take Mauritius where it was back in 1968 from a monocrop economy. We diversified into the textile industry, tourism. We also set up the ICT BPO sector, financial services, and today Mauritius is an economy that has a number of economic pillars contributing to its GDP. So I would say the constant has been in terms of looking forward, in terms of how we can make Mauritius a better place for our citizens, a better place for our people to gain their living, and also a place where it is good to do business. And throughout, I think there has been a policy of export-oriented strategies. Our key markets have always been Europe, the US, and today we are looking east in terms of Asia and the positioning Mauritius as a gateway. So from 1968, today Mauritius, as the Vice Prime Minister has said previously, we're an economy with a GDP per capita of $8,700. And we have gone a long way.
Now, George, he mentioned all the strategies, all the pillars. It basically boils down to diversification.
I will see it a bit differently. Like a big company, it has always been consistent product launching. It has been sugar for a very long time, and then we launched textile products, and then we launched services in tourism, then what was known as offshore products, then technology, then offshore products, again, which we rebranded into global business, then infrastructure. It will be more of those in the near future. So I think that's basically how I would see the story of growth in Mauritius. Consistent, persistent new product launching, reviewing the products, and then adding value, improving them, selling them to the whole world, and probably perhaps more so in Africa.
Raji refers to rebranding, new product launches. Who's driving this agenda? Is it government who draws up policy? Is it the private sector who brings in FDI and business? Who's driving this diversification, this rebranding, this product launch?
I think it would be fair to say it's a mix of both. We need policymakers to get, let's say, the environment right. At the same time, business is the actual driver in terms of implementation. I think maybe just one word a bit on the history of Mauritius post-independence. It was a clear strategy of partnership between the policymakers and the private sector. For example, Mauritius benefited from the sugar protocol. It was a political arrangement, but implemented by the private sector. And there was part of the export tax, which was used for free education and free health. So trying to optimize in terms of the political economic movement post-independence has been a very important area. So to come back now to your question in terms of the branding of Mauritius today, I think I will add to what Ken has said. We're able to adjust, post multi-fiber agreement, the textile sector readjusted to that. Post sugar protocol, though we still have it, but the price has gone down. Today we have re-engineered completely the sugar sector. In terms today of the ICT, which is one of the major component of our economy, again, it was having the right policy, but at the same time getting the business to come in today. ICT BPO represents about 6.5% of the GDP. Seafood is emerging, still very new, but it is today at about 1.8% of the GDP, growing at 11%. It is the fastest growing subsector of the economy. Financial service is moving very well, and today we are trying to push on those new areas, be in terms of education services, be in terms of health services, and therefore it has been a mix of getting the policy right, but at the same time getting the business to move forward. We shouldn't forget that in Mauritius, about 80% of the GDP is from private sector, which contributes to about 78% to employment, to about 74% of of investment. So it is, an interesting mix of policy and implementation, creating the space. Of course, we have constraints. We will talk about them later.
Raj mentioned 4 of the key pillars of the Mauritian economy, that being tourism, textiles, sugar, and of course financial services. Now traditionally, or shall I say stereotypically, when one thinks of Mauritius, you think sun, sea and sand, and rightly so. Yep. But there's so much more to the economy. It's not just a leisure base, it is a business destination. And as a business who've set up your headquarters in Mauritius, how do you break through that stereotype? How do you exemplify that Mauritius is more than just a tourism destination?
That's the challenge, and it's really about marketing at this stage, I think, for Mauritius. And I think, we're a brand new operation in our bank, and it's really been built off a lot of branding and marketing, a lot of road shows, promotions. So I think Mauritius it's accomplished a tremendous amount and been through a tremendous amount of change, reinventing these products over the years. I think what's the game changer now is obviously Africa. As Africa now is going to be this huge market around us, Mauritius has been a fantastic innovation, but without a big inherent market around it in the past. I think we've been launching all these industries for very far-flung markets, tourism, fisheries. Now the challenge, the opportunity is to integrate those into what is happening in Africa, and I think we will become then very much a natural business center for Africa. We often say when we're making our promotions around the world, we do want people to start thinking of us more like a Singapore or Hong Kong for Africa, and I think we're already doing that, but I'm not sure the message is so widely known yet. So as we go, it is our greatest opportunity now, how we take the brand of Mauritius, all that it can do, and make it more aware, and that's what all of us here are doing regularly. So it's a very exciting opportunity, and really it's really a marketing push now.
Now, Kenny, speaking about the messaging, getting the Mauritian brand across, earlier Vice Prime Minister Duval mentioned the African Renaissance and Mauritius's role in that. James mentioned being a hub similar to Hong Kong and Singapore, but they've got the scale and they've got the size. Mauritius is 1.3 million population. How are you hoping to attain that same level as a financial hub as these two great economies?
First of all, I would say that we have been able to position Mauritius as a strategic location in the Indian Ocean. And as we have mentioned earlier, we have leveraged very much not only on the internal size of Mauritius, but also leveraging on the strength of the regional cooperation that we have, the market access that we have with Europe, with the US, and with Africa, SADC, COMESA. So we are an important player. And I would say also that traditionally Mauritius was known as the spice route. People used Mauritius in the early days as a trading post. Mm-hmm. And Mauritius is also known as the star and key of the Indian Ocean. Today, I would say that Mauritius, we hold the key to unlock opportunities in Africa, and we are the star performer in Africa. That's the differentiator for us in terms of doing business. We're first in Africa, We are 19th globally, and we're continually making sure that the business environment is streamlined, is seamless, so that businesses are attracted to Mauritius. So I would say that this is very important for us. We see the Look East policy is now starting to pay dividends. We have been able to have connections with China, with India, just to make sure that we diversify our market base. We're getting more tourists from this part of the world. And the idea is really to consolidate, as the Vice Prime Minister said, is really making sure that we have the connectivity, we have the ecosystem, and we will truly become the star and key of the Indian Ocean.
You mentioned tourism, and let's go to that, George. Tourism still contributes significantly to GDP, annual 10% and higher. But your traditional tourism markets are under pressure. The Europes, Italy, France, Spain, Germany. It accounts for 2/3 of your arrivals, but first quarter results down 7.5% for this year. Are you looking to these new markets to lift these numbers? And for those Europeans who still want to spend on Mauritius, how do you incentivize it as a value for money destination?
First of all, if we evaluate the size of the tourism market in the world, it's nearly 1 billion people traveling cross-border in further destinations. And significantly enough, there are, according to my statistics, nearly 500,000 people traveling between Southeast Asia on one hand to Africa, and on the other way around, traveling above Mauritius without the possibility of stopping in Mauritius. And we need to look at that. What are the reasons which preclude them from coming here for a few days, for example? I think this is a big potential for us here. And probably the answer is looking at air access policies, looking at the connectivity between Africa and Mauritius. I think this is potentially a huge market for us to tap on. You know that the market size of Mauritius is nearly 1 million people. Yeah. And 50% of the equivalent of this travel above Mauritius without the possibility of stopping here. And within COMESA, 8 million people travel in between the member countries of Africa. And we have the objective of making Mauritius the platform of entry into Africa. What Singapore is for the region of Southeast Asia, what Hong Kong is for China. I think there's a real possibility there, but we need to get our policies right in that respect. I'm pretty confident that there are things that can be done and that will be done that will really make tourism take off again.
Raj, it's not just about tourism though. You want investors to also see the value of the tourism sector. The sector is under a bit of pressure, traditional markets pulling back. So how do you still deem it as a viable investment opportunity? How do you present the investment case of tourism to outsiders?
I think we are moving from tourism per se to what I would call a hospitality cluster, as we did from sugar. We moved from sugar to the sugarcane cluster, okay? From textile per se to the textile cluster with fashion. Coming back to tourism, it's clear today that the product is being reviewed, being relooked in terms, we used to have conventional leisure, 10 days, long haul, seafront, Today it's going to be a mix of a number of components. To the hospitality cluster, which will be evolving, is going to be health-related tourism, education-related tourism, eco-tourism, but more importantly, the business tourism. So the product will change in its own, sort of dimension. It won't be the 10-day, 8-day sort of typical tourist coming and staying in our hotels in the seafront. It's going to be a mix of all those products. So trying to move from that will take time, will take some time, which we are doing already. I think the good thing that the Mauritian investors, they have been present in some countries already, like Maldives. There are 3 major groups today in Maldives, and this has given them the exposure to the Chinese market, and this can be used for the Mauritian market. We're also present in Seychelles, so that's extremely important. So what is happening in tourism, if I may extrapolate, Mauritian companies are re-engineering and going into Africa For the Mauritian dimension, I would say in a big way, about 60 companies in 23 African countries, and regional cooperation today is for us a must. So tourism, what has happened in other areas, for example, I take example, again, in textile, we moved to South Africa, compensate our loss in Europe. Sugar, we moved very much also into refined sugar, but also investing in the region. Tourism, a diversified hospitality cluster, but to it, in terms of the new emerging economic model of Mauritius, air access will remain a major challenge for us in terms of the rebranding of our tourism sector, of the whole of the new economic model of Mauritius.
Now, apart from air access, to expand, diversify, change an economy, change a sector, you need capital and you need investment. How tightly are banks gripping their money right now? Let's take the tourism sector again for an example in Mauritius. You can only build so many hotels. You can only set up so many expansions. How's that affecting capital and funding at the moment?
Well, look, it's still a viable industry, even though it's under some pressure. I mean, the groups that are here are big, they're here for the long term, and they've had diversification from their operations in Maldives, as was mentioned. So it's not that dire because they're operating on a regional basis. I can't speak for all my competitor banks, but a number of us still in consortiums. We financed some recent acquisitions by overseas investors in this last month. So I think the international investors also see that there's a bottoming, and that if the African potential continues to grow, people say, well, it might be a little bit subdued for a year or two, but they're looking at that becoming a hospitality hub. And so we are seeing bigger international groups wanting to invest in that sector here, and existing groups are trying to do other things in the region as well. So it's still a core for Mauritius, and so banks will still be active in that. So I don't think we're holding onto our wallets too tightly. I hope everyone will agree.
Now, Ken, as Raj rightly said, it's more than just hotels and beaches. It's a hospitality industry. How do you open up the private sector to develop additional opportunities? He mentioned business tourism, and integrate more players into the value chain without having to build new hotels or institutions?
Well, we are trying to be innovative, and we, as Raj has said, we try to grow the kind of different clusters. We engineered them and see opportunities. In the hospitality industry, for example, we have integrated the luxury villas as part of the offering. We also now have the concept of MICE, meeting, incentives, conference, and exhibitions. We're now having more and more people doing conferences in Mauritius, and we're encouraging that. This year itself, we will have so many conferences, not by the government, not by certain local operators, but international players coming to Mauritius and doing these. That is going to grow the market for us, and we would like to see that encouraged in the years to come. And that would help in terms of the industry, would help the tourism sector. And basically, we would like to attract more players from overseas to come. At the same time, in terms of the market size, we are diversifying the tourism sector. You mentioned some figures, but from January to May of this year, we had seen an increase of Chinese nationals tourism coming to Mauritius, 70%.
Your new markets?
New markets. From India, also, it's the same figures. So we see that happening, and it will supplement what is happening in Europe. Obviously, we're not immune to all the external shocks, but the strategy of government is to diversify the market base, look towards emerging markets, and that's what we are doing.
Right, that diversification includes financial services, another key component. Services contribute 70% to GDP, and financial services 10.2% of that. We mentioned that Mauritius sees itself as a hub, but that it's not the same size as the Hong Kongs and the Singapores. Let's talk about being a conduit into Africa and Asia for that. Asia, we've got an established market with India. Africa is still growing. How are you going to use this regional relationship to your competitive advantage, both here and globally?
We know that last year, for example, there was something like $1.3 trillion of cross-border movement of funds from one country to another. And what we have here in Mauritius is really a very, very small share of the pie. I would look, to answer your question, at the supply side of the equation. I have no problem with the demand side, 1.3 trillion, and probably this year will be even more. So we really need to look at the supply side of the equation. In what fields, in what products, in what services do we have particular strength? I think we have a few of those. You know that Mauritius is perhaps the most popular platform for investment into India. And Africa is a huge potential. Well, let's look at the supply side. Do we have the right services, the right products, and the right, say, mix of, the minister said, treaty agreements, investment protection arrangement? I think these are things which could be looked at again and see how we can really transform Mauritius into what Singapore is to the whole world, not only to China or to the region of the Southeast, what Hong Kong is, what Dubai is, what BVI is. But I'm sure that we have a huge potential there, but we have to look at the products and the platform and where can we improve it so that people really say that, well, Mauritius is the location of choice for us to invest into Africa or to any region of the world.
Now, Raj, again, he mentioned identifying the hotspots and seeing where we can, improve on services. But whose responsibility is that again? You mentioned private sector, 2/3 of contribution comes from there. Whose role, whose responsibility is it to drive this agenda, and how quickly can we turn around these ideas to make sure that we coin in on the success that Mauritius is seeing on the continent?
If we look at a bit what is happening today in Mauritius vis-à-vis Africa, I would say that the different stakeholders are on board. I did mention today that a number of companies are already in the region, so companies are repositioning themselves, re-engineering themselves to be in Africa. I see also institutions, financial institutions, banks, are looking very much today at developing products in terms of financial engineering that would really sort of look for business in Africa using Mauritius as a base. The capital, the stock market, I'm aware that lots of work has been done at the level of the stock market. Sunil is present here, trying to see to what extent we can have listing in Mauritius for funds, for products, for companies operating in Africa, raising capital in our stock market, and therefore tying strategic alliances. Board of Investment has put up the Africa Center of Excellence to encourage promotion outside Mauritius in Africa. There is a private sector initiative, the Africa Mauritius Business Initiative, whereby a number of private operators are sitting together to think strategically of going into Africa. So by looking at what is happening on the field in terms of the policy making, in terms of investment, in terms of the range of double taxation agreements we are trying to develop and IPPs, yes. But I think where we have to enhance our presence in Africa is in terms of having a more, let's say, proactive political presence in Africa. I've said it before. I think we are in South Africa, but we have to be in East Africa at a level which is quite important. We have to be in West Africa because as we did in Europe, Mauritius was very much present in Brussels, in Paris, in UK during those days. Yeah. Today, we have to have an enhanced political presence in Africa. If you look a bit at our history, Mauritius was part of OAU, it's part of the African Union, but today, we are in the field of political economy to move forward. So getting the business right, getting the environment right is very important, but getting also our political economic presence in Africa will be extremely important. Like there are a number of initiatives which will be beyond just pure business negotiations. What will happen to the tripartite FTA between SADC, COMESA, and the EAC is extremely important. And Mauritius and the business community, we are pushing very much in the same way as the policymakers in Mauritius, okay? And therefore, as a business representative, I think we've been always working in partnership with policymakers, and we have to have an enhanced political presence in our little way, in some of the key African countries, so that really we can meet our ambition of being a platform in or through for Africa.
Now, James, the AfrAsia Bank is using this as a platform. You just recently announced your regional expansion. How's this tie into your long-term plans? And is Mauritius what you foresaw 6 years ago when venturing into the market?
It is indeed. I think the key, and we talked a bit about it, it is Mauritius Inc. and our partners are going to have to put our balance sheets to work. What does Africa need? It needs capital. It needs expertise. There's lots of it in our various industrial sectors here, whether it's sugar and energy that we can bring. But increasingly, Africa needs capital, and Mauritius is raising capital on our own balance sheets and for investors to mobilize that capital into those markets. So we've expanded into Zimbabwe. We're looking at other countries. We have specialized funds which provide debt and equity for a variety of industries. So, there's going to have to be, I think, we're a platform already, but it's going to be more than that. It's going to be a place that actually does business for Africa, in Africa, across Africa. So we'll also have to be a bit strategic about that. We can't conquer all 54 sovereign entities in one go.
They're unique markets.
Unique markets. So we, for example, what we see is one niche. Oil shipments coming from the Gulf through the Beira ports in Mozambique, then into Harare, into there. So those are transactions which banks in Mauritius are financing. So we have to make ourselves relevant, and it's not going to be just about structuring and tax. We're a capital haven. We like capital. We work with it well. We know how to deploy it, and that's what Mauritius Banks and Mauritius Inc. is going to have to do to be a relevant partner for Africa.
Now, tax is not everything, but it does play a substantial part. Anything that helps save the bottom line is a businessman's best friend. Now, Ken, let's talk about tax in Mauritius. How does the island's low tax environment, coupled with its various double tax agreements, make it such an interesting place to work in as a business? And then let's talk about your renegotiations with South Africa and India. South Africa concluded in May this year. Still ongoing with your long-term partner, India. What would happen if these negotiations don't go favorably? Because some territories do feel that they're getting the short end of the stick when it comes to these double tax agreements.
Well, I would say that the strategy of government back in 2005, 2006 of reducing taxes has paid a lot of dividends. We attracted a significant amount of FDI in the country. In fact, we attracted from 2006 to now around $2.5 billion of investment. And it's more than the 40 years previously combined together. So it shows that the strategy of government of having a low tax regime is working. And we would like to pursue in that direction of business facilitation, of enhancing the business climate. With respect to the double taxation treaties, I think, as you said, these are in discussions. We would like to see it as a win-win situation for all the countries, because obviously Mauritius is a jurisdiction of substance. We want to encourage more players to come to Mauritius. And the fact that the double taxation treaties help in terms of structuring these investments help both ways. First, in terms of attracting investment and providing the international business community with a platform, a competitive platform for investment, cross-border investment, and at the same time providing Mauritius with the significant amount of interest from international players. So I would say that for the two countries that you mentioned, these are ongoing process. We are still discussing about ways to enhance substance of making this work both ways for all the countries. And we hope that this will conclude soon.
George, there is a bit of a misconception about Mauritius and tax. It is a low tax jurisdiction, but it's not a tax haven. It is on the OECD's white list of countries that fight money laundering and corruption in that regard. Debunk some myths for us.
How do we define a tax haven? I think two characteristics of a tax haven. You go and hide your assets and you don't know who are the owners of the assets. And generally, tax is zero rated or there is no tax at all. And Mauritius is none of those. We are certainly a low tax jurisdiction. 15% is the headline tax rate. but it's a tax-efficient country. 20% of our workforce is employed in the public service. Free education, free provisions of health, and all these are financed by the 15% headline tax rate. So we usually get confused between what is a tax haven and what is a low tax jurisdiction. We are an effective low tax jurisdiction and we use it efficiently. And I have just given you the few numbers. So I think we need to put it right. We are not a tax haven. We are a low tax jurisdiction which uses its tax revenue in a very efficient way.
James, you wanted
I
to
just
add?
wanted to add on to that because it's important. It's a question we face a lot. Besides the low tax on the personal and corporate side, let's also not forget we have VAT. We also have other indirect taxes. We also have substantial duties on cars. So there's more than enough tax revenue, I think, being generated to finance what I'd say is a very, very substantial social safety net. So, you know, there is some institutionally driven tax relief for double tax, but we also have to remember all the businesses that now spin around that industry, we all working in that are paying our personal taxes on
Well,
the
we should
revenue
hope so.
on that. Well, I am. But, so you know, there's a lot of other tax revenues being generated on the overall economic industry. So we're just not a tax haven in whatever way people want to define it.
I mean, we could have put the same question. Is Singapore, is Hong Kong a tax haven? Hong Kong has a tax rate of 17%. Singapore has a tax rate of 20 or 32%, depending on whether it's tax on individuals or tax on corporates. They are low tax jurisdictions and certainly not tax haven.
Well, gentlemen, I think we should leave it there. We've discussed some of the benefits. Now, after the break, we're going to discuss some of the impediments to the Mauritian growth story. Stay with us.